We are now coming to our first question and answer session. To ask a question, please use the question function at the right of your screen. Please submit questions that you would like to ask the speakers you have just heard from. Our first question is, TBA grew 3.4% 2010 to 2020. Is this a reasonable proxy for TBA growth between 2020 and 2030? Excuse me.
Hello, everyone. I'll take that question. A short answer would be yes, 3 to 4% growth. And I think what's attractive about the TBA fundamentals is three things: demographics, including emerging market demographics, penetration, which is growing in many markets, and premiumization, value, growing faster than volume. So that would be a good proxy for the next decade. Could we have the next question?
Certainly. Our next question is, Ivan, great presentation and welcome the new medium-term guidance this morning. Do you see any risk that pressure on disposable income and higher inflation could make that challenging?
What I would just spend a few minutes on is just talk about the affordable luxury nature of our category. And I'll use the US as an example because I think it really brings it to life. Premiumization trends, as you've seen in the presentations, are really strong. But when you look at it from a household standpoint, the typical US household is spending $17 a month on spirits. Half the households buy spirits. So for those who buy spirits, they're spending about $35 a month. That's $1 a day. Now, when you look at the specialness of our brands and the ability to trade up, and just look at the top end of the US market, say above $40, the ultra premium end of that market, 50% of the top end of that market is from people who earn less than $100,000 a year. 60% of it is multicultural, and that's going to grow. And young people, 21 to 34, disproportionately buy ultra-premium products. In fact, twice the amount than they would buy of value and popular products. So when you put this all together, we are very fortunate to be in a category which has resilience because of its affordability. And it's a small part of the household budget. It's an affordable indulgence. And what you serve or what you order at a bar says a lot about you. And what we're seeing right across the world is people are trading up, whether it's from illicit alcohol into entry-level branded alcohol in Africa, or moving from black label to blue label in China. Every step of the ladder, we are seeing trade up. So I do see a resilience to premiumization continuing in spite of economic volatility. And on inflation, we have multiple levers that we will deploy. Clearly, mix is in our favor. Our products, many of them are aged. We have productivity at place. We have revenue growth management capabilities that are strong. And we expect to be able to handle inflation because we've got multiple levers to work with it. So that's what gives us the confidence in this guidance that we laid out today. Next question.
How sustainable is the incredible growth that you've been seeing in the US? When will it slow down? And how confident are you that you can keep gaining share of tequila?
I'll turn it to Deborah.
Hello. So as far as growth in the U.S., I think the one thing to remember is that, first of all, from a total spirits standpoint, from an industry standpoint, household penetration is still relatively low. And we've been continuously sort of sourcing volume from both beer and wine. And so there's a lot of opportunity just for the spirits industry to continue its strong growth. Then if you look at Diageo, we're still only 6 to 7% of total beverage alcohol. So just a lot of runway to still go. And look, clearly the move to during COVID to at home and that occasion certainly there was a stock up. However, we're still seeing, even as bars have reopened and hospitality is largely open now, we are still seeing great resilience in the at-home occasion. And, as Ivan just spoke about, when you look at the fundamentals of our portfolio, the multicultural appeal, there's just a lot of, the demographics, everything's really kind of working in our favor for really long-term sustainable growth. When it comes to tequila specifically, I also really feel great for kind of the same reasons. As I discussed on the video, once again, it's a really versatile liquid. And so tequila itself still has a lot of runway within the US. And then our brands specifically, I think, are really hitting, with Don Julio and the authenticity. 1942 is a brand in its own right on the luxury end. And then plus we've got Casamigos, which is a more modern interpretation. And so really we feel like both of our brands, they complement each other and really set us up to continue to gain share within that fast-growing category.
Thank you. Next question.
How significant is Asia in contributing to your future growth, especially India and China?
I'll turn it over to Sam on China. On India, I would say we feel very good about the underlying demographics. Penetration of spirits is still low and is growing. Premiumization is very strong. We're seeing it in the performance even through the pandemic. It's accelerated. Scotch whisky is doing very well. And as we know, a very young population, social mores are changing, all bode very well for strong, healthy growth and premiumization in the spirits category in India. So we feel very good about it. And Indians love whiskey, and long may that continue. Sam.
Hi, Ivan. Hi, everybody. I think we also feel very good about the growth prospects for Asia and specifically China. I mean, we've talked a little bit about being 10% of Diageo over time. We've already come from 2% to 5%. So our progress has been terrific, and I guess we've got two really interesting pillars that are going to drive that growth. I mean, Ivan's talked about premiumization, and we're privileged to have a position in Baijiu through our Shui Jing Fang participation, which is going to really capitalize on that premiumization trend, which is not new. I mean, Baijiu's been premiumizing for a decade, and that's really what's going to continue to drive the growth in what is the largest spirits category in the world. So we're privileged to have a position there, an exciting position, and we've seen incredibly strong growth. And then in Scotch, we've got kind of the opposite. We're a strong player in Scotch in China, but the category is still very underdeveloped, at less than 3% penetration. So we're working hard to drive the category development through whiskey summits and boutiques, and we're seeing lots of green shoots in Scotch, as I mentioned, through what's happening with auctions, and also 600 whiskey bars have now opened up, Scotch whiskey bars, across China. So our job is to continue to develop that category and to continue to develop our brands within the category. So huge runway in Scotch, significant position in Baijiu, which we think underpins that ambition to get to 10% of Diageo sales over time.
Thank you. Next question.
With regards to your tools, how advanced do you think you are relative to the peer group?
With regard to tools?
Tools? Do you want to talk,
Yeah.
Christina?
Christina?
Yeah, I'll talk about that. So look, we, as you know, started to work with Catalyst in a way that is really fit to our portfolio and to our industry back in 2017. That has given us an enormous amount of experience and also data points. In addition to that, we have worked to continue improving the methodology. We have added new tools, new layers that gives us not only more data, but also an expanded time frame in which we analyze our investments to optimize it. Now we have had the ability, as I mentioned earlier in the video, to gather even more data points because we are touching consumers at more points of engagement with the brands than ever before. That in turn multiplies the degree of our insights. So we believe that we have fundamentally strong tools that give us an advantage insight into how our categories operate, what occasions are performing for consumers, how brands can play in those occasions, and also what content do we put out there and how we give ourselves the opportunity to improve it over time. So I'm really encouraged about the kind of, not only the tools that we have in place today, but also the systems, the methodologies, and the capability that we have embedded across all our teams globally to continue improving them towards the future.
You know, Christina, I was going to say I'll jump in too. I think you wanted to jump in too. I do think probably the biggest proof point is the market share gains that we've been able to make, and I really feel like the tools are part of that. Certainly in COVID, I think a lot of the U.S. share gains really were because we were able to pivot and adjust, and really kind of micro-target it as various cities and states would open and close. And various things were going on, and really without these tools, it would have been quite difficult. And it was very clear that we were doing that quicker than some of our peer companies.
Yeah, and it's quite similar in Latin America. Hi, everybody. So the fact that during the last 12 months, we have been able to expand our TBA value share in almost 100 basis points. When I look what has been, at the core of that is our real understanding of what are the consumer occasions and how they have shifted, what are the new consumer motivations, and the fact that we have now tools like Edge to allow us to get scale with precision in a way that is sustainable and in a way that we are really disrupting consumer occasions that were in the past were predominantly owned by beer, wine, and locally produced spirits.
Thank you. Next question.
For tequila, A, is there enough liquid to satisfy category and company aspirations? And B, Don Julio Primavera, why is this the right time to introduce flavors into the brand franchise?
I'll turn it to Deborah, but the first thing I'd say is if you spot a bottle of 1942, buy it.
Yeah, I'll just add to that. We think we have enough liquid, and then demand just continues to grow. And so there are certainly some of the things that I talked about on the video. These are limited, edition offerings. So certainly you should pick it up if you can find it. And you ask about Primavera specifically. It's actually not really a flavor. It's a reposado, and it's kind of aged in orange cask. But it really is an aged tequila and just finished just really well. And great for that mid-tempo, kind of informal daytime when you really want to treat yourself. So, but yeah, it really is great to actually see how well something like Primavera has sold out incredibly fast. And so I think it just shows us how much we can expand the brand and how much more opportunity there is.
Thank you. Next question.
The pandemic has disrupted consumer behavior. Do you think this represents an inflection for spirits' share of throat trends, and why?
Christina?
So look, the pandemic certainly has disrupted consumer behavior, and we observe very quickly, clearly with the closure of the on-trade, people pivoted towards the at-home consumption. And what that in turn allowed for people, given the fact that they had more time and many fewer opportunities to enjoy themselves in socializing occasions, was actually, as I would describe as the discovery or the rediscovery of spirits and the beauty of mixing drinks to pamper yourself and those with whom you can socialize given those circumstances. So we have seen a tremendous growth of the at-home occasion and certainly spirits within that occasion, and we believe that that will continue. Because although, as I mentioned earlier, for sure the on-trade will reopen as soon as it's safe, and we have seen people really excited to reconnect with their friends or their families, etc., outside. that idea of when I'm at home, I can drink better, I can give myself a better experience, I can even experiment with flavor, and frankly, our portfolio gives us and everyone the opportunity to really enjoy a fantastic portfolio of great brands suitable for great occasions. So yes, indeed, the at-home occasion expanded. I believe that is there to continue, and I think we have enormous room to play in that space.
And if I can may just bring a very live example, because in Latin America, the on-trade is already coming back to life. And what we are seeing is that those consumer behaviors that in at-home specifically occasions, they are sticking, which is encouraging to see in a market that we are already, in markets that we are already seeing back, the on-trade coming back.
Thank you. Next question.
Your share gains accelerated during the pandemic given innovation and focused marketing. In the post-pandemic environment, are you confident that you can sustain these share gains?
I'll go. I'll take it. Yeah, I mean, we are very confident, and I think it's because this innovation, it really is kind of sustained innovation. You saw today things like Bailey's Deliciously Light. It's the great taste of Bailey's with a little less calories. That's something that is a sustained kind of well-being trend. And that type of innovation keeps paying off into the future. And I would also say the tools and some of this focused marketing that we're doing as we expand these tools. I mean, in the US, where we've had these tools a number of years, we just keep adding on more and more capability to it. And we continue to find opportunities where maybe we're underdeveloped in this market, or we see this zip code that has a lot of former Colombians that are there, and so Old Par is an opportunity. So we continue to find these targeted opportunities, and that's going to continue, kind of well beyond the pandemic.
I would also just add, in the Diageo culture and performance management, our focus on quality outperformance is very strong. And it's at the things we review. Before we look at the financials, we look at the quality of market share performance around the world. And I'd say that muscle through the pandemic and through COVID has strengthened. And this is a team that enjoys winning, and I would say is going to do its damnedest to keep on winning. And we're providing the support and the investment smartly and with the analytics to do it. However, we've got tough competition, and there's no question this is we've got to be at the top of our game and look at every aspect of our marketing and commercial and supply chain machines to make sure we're getting every bottle, every case, and earning it in every part of the world. So I'm pleased with the momentum. As you saw, we have 85% of our business that's holding or gaining share, and we intend very much to continue to maintain that outperformance going forward. And that's what gave us the confidence in putting our ambition out there, the 2030 ambition, to take our share from 4 to 6% of TBA. Next question.
Big focus on reserve premiumization. How do you balance premium packaging, which is often heavy, versus the higher carbon footprint from heavy bottles? Can you turn this to your advantage in your brand storytelling?
Christina?
So look, yes, indeed, big focus on reserve and in premiumization. And what we see in luxury, in fact, is there's a high degree, as we mentioned earlier, of interest in understanding how liquids and products are made and where they come from. So yes, of course, we will be looking at the packaging. We will be engaging with consumers to have a conversation around what kind of packaging delivers on the promise that they're looking for in a way that is really, exactly to the goals and ambitions that we set up for ourselves for 2030. I think indeed there's a great opportunity. You may have seen some of the work that we've done on Johnnie Walker. If you ever go to Princes Street, the whole idea of how things are sustainable, even sustainable cocktails, fewer packaging in the delivery of highballs are present there. You can experience delicious liquids in that context. And certainly the portrayal of our new paper-based bottle, which we've done with a consortium of other companies under Pulpex, and that will be made commercially available for 2023. So certainly, I think this is a fascinating area where a lot more work is going to be happening, and I'm sure that luxury consumers will be very, very interested.
Thank you. Next question.
Can you please touch on your strategy for RTD in the US, which appears to be gaining share?
Sure. You know, the way we look at ready to drink, you know, we're not going to play everywhere, but where we play, we want to win. And the way we're looking at it is RTDs are premiumizing. It's really an opportunity for us. And I think our Crown cocktails are probably the best example for it, where, you know, look, the seltzer trend has been huge, and it's certainly a huge category, but you're starting to see consumers look for more in their canned cocktails, and they are migrating up the price tiers. And so we see premiumization as an opportunity. We see differentiation, not just bringing sort of another flavor of seltzer, but instead really bringing quality brands and kind of America's favorite cocktails into you know, RTD. And then, you know, we also look for opportunities where it can really expand our brands. So once again, I'll use Crown, I'll use Tanqueray, Kettle One as an example. This really brings kind of some newer, younger LDA plus into sort of these brands, and so it's exciting to see how it's growing our brand penetration on some of our largest brands.
Thanks, Deborah. Next.
Hi, Ivan. Great presentation. Would like to understand what you believe is the sustainable level of growth for Scotch Global that underpins the medium-term net sales guidance of 5 to 7%. Thank you.
I would say we see as the whiskey trends long-term as very healthy. I think you saw it in my presentation, the faster growing categories of agave, gin, and Scotch. So Scotch will be mid-plus single-digit growth. And we certainly intend to perform and gain share against international whiskey over the next few years. So I'm very excited about the future for our total whiskey portfolio, and specifically for Scotch. Within it, premiumization is accelerating, so we're seeing it really, really strong. And Diageo has phenomenal assets, the brands, the distilleries, the experiences, and the quality of marketing we're putting behind our big brands and our malts portfolio. But most importantly, I'd say the consumer markets, and you take places like China and India, still have a very attractive runway ahead in terms of growth. Latin America, we are a tiny player in TBA. And what you see with our brands, like the deluxe Scotch brands, Johnnie Walker, Black Label, and Buchanan's, we are recruiting young adults from beer occasions directly into Scotch whiskey. It's not coming into deluxe Scotch whiskey, not coming in at entry-level price points. So I'd say the team and I feel very optimistic and confident about the future of Scotch. And as you know, it's our most important category, and we certainly intend to keep it that way.
This concludes this Q&A session. If your question has not been answered, please contact the Diageo Investor Relations team. Thank you, and please stay tuned for the next session.
Thank you.
This leads us to our second Q&A session. To ask a question, please use the question function at the right of your screen. Please submit questions that you would like to ask the speakers who you have just heard from. Our first question is, how much of Diageo's agave procurement is vertically integrated versus third party, and how is that expected to evolve in coming years?
I'll turn that over to Ewan.
Yep. Hi, everyone. So, look, we've been long planning for our agave management strategies since pre-acquisition and then since the growth has come through. We have a dual source in both farming our own that has been increasing and also building the partnerships with, our best growers, which have strengthened over the years and have put us into a strong position for the future. So we'll continue to evolve that in the coming years in line with the agave market. And we know that it's going to move into a period of, increased excess agave, and we'll manage accordingly the split between our own agave and with our partner farmers.
Thanks, Ewan. Next question.
The next question is, does your global supply chain excellence provide you with a market share opportunity given inventory shortages in the trade?
Yeah, what I would say on that question is that undoubtedly coming into the pandemic, what we've been setting up from this program to be end-to-end across our value chain, really integrated across the business through to the markets, put us in a position where we came in with momentum on supply chain visibility and inventory visibility. And if you couple that with some of the advantages in particularly the global export supply chain, and a lot of our volume comes out of the UK and Scotland, our scale, we're the largest containerized exporter in the UK. Out of Scotland, we do all of our exporting from the 2 ports there. And actually that gives us both the scale advantage with the relationships with our suppliers and the global freight companies, but also gives us access at times that not everyone else does. So we can access in at weekends, night shifts, and that puts us in a position where we can keep throughout the week really utilizing that type of capacity. And that does give us a commercial advantage. The last thing I'd say is that versus a year ago, our service levels, as you saw in my presentation, are up 2%. And when we've benchmarked that externally, that's at leading levels. So that will put us in a strong position to continue to support growth.
Thanks. Next question.
Our next question is, as you think about the long-term category and prospects of Scotch, have you started to lay down extra inventory ahead of a potential change in tariffs in India? You see Scotch growing 7% over the midterm. Does this include any assumption around lower import duties in India?
Yeah, I can take that. I mean, firstly, the India FTA agreement still has to play out. So there's clearly, while conditions are more favorable, we're by no means at the point of saying this is going to happen. So one of the beauties of our Scotch business is that we lay down whiskey kind of for planning for decades ahead. And in our medium-term growth, to the question I answered earlier, Scotch growing at mid-single digits, so value growth, we've not factored in a dislocation of India really opening up. But we have the ability to respond because we can allocate our whiskies to the opportunities at the appropriate level. So we're watching it. We clearly know the scenarios under various scenarios of what might happen on the tariffs. We do understand the implications. And Ewan and the team in Scotland are managing scenarios against potential outcomes. And we feel confident we'll be able to work our way through whatever happens in India and for our total Scotch business.
Our next question is, do you have a fixed idea as to whether talent should be homegrown or acquired?
Right.
No, I don't think we have a fixed idea because we like to be able to acquire the very best talent externally when we want to supplement our homegrown talent. Ideally, we would develop and grow people from within, and we've got some great stats around how we do that over a number of years. But where we need to get new skills, capabilities, we go out to the market. We've set ourselves a challenge of having 70% of our hiring happening through internal promotions, and then we'll supplement that with 30% or so that are acquired from the external market. I think that's a good balance for us for now, but as I said, we're not fixed because we think we need to be agile in how we allocate talent to the right opportunities.
I mean, John, in Europe, you've got that balance. What have you found?
What I think is, I like the way we have about 2/3 of our internal promotions. Our promotions are internal, and about 1/3 of people who come outside. And what we found is the experience base in the market across a number of different countries and in our sector is valuable. but then you leaven that with specialist skills in data and analytics or e-commerce, and that creates a powerful result. So I think the balance we've got right now is working and bodes well for the future.
Yep. Next question.
Our next question is for Hina. What do you see as the biggest opportunities for India and the biggest challenges?
Hina.
Thanks, Ivan. Hello, everyone. I think our glass is half full as far as the opportunities in India are concerned. I mean, basically, the first opportunity for us is really accelerating premiumization, right? So a few years ago, we were at 50% of our portfolio being the premium end. Today, we are at 70%. And if we look at all the macros, they point to a much bigger scenario for us to accelerate this premiumization. I mean, 30% of our households in the next 3 years are going to be in the upper and high income groups. And there is a McKinsey study which says, India will have the third highest number of high net worth individuals. So clearly that's a big opportunity for us on our Scotch and luxury portfolio. And we have a fantastic portfolio of IMFL also to tap into this premiumization trend and really accelerate our growth. And our mission really is to sustain double-digit growth in our business. The other big opportunity area I would say is that we have actually taken leadership on Society 2030 goals. I mean, if you look at the inclusion and diversity narrative, we have really played a very strong leadership role in changing the narrative for the alcohol industry, where today women like myself are happy to work for a company like Diageo and actually work further to normalize it, right? Even on ESG, I shared some goals with you. I mean, some of the achievements we've had, and equally on positive drinking. So we have a real opportunity as the #1 spirits company in India to be able to really impact the communities around us and make drive a real positive change. On the challenge side, I would say our regulatory environment is tough. And we are also not a free pricing market. So in the face of inflation, I think pricing and limited ability to take pricing and to deal with regulatory challenges is a challenging thing. But the way we look at it, I mean, on the regulatory front, I would say when some states come up with regulatory challenges, there are others which give very positive policy responses like Delhi, which has really changed the route to market and is transforming the retail environment for consumers, giving us huge opportunity. And on the pricing side, while we advocate strongly with the government, we are also working on the things we control. So, all the levers that Ivan described, right? Pushing the mix, looking at revenue growth management, a very strong productivity agenda, and really pushing all the levers we have to tackle the inflation we have on hand, and we think we can manage it.
Thanks, Hina. Next question.
Our next question is, with regards to your sustainability ambitions throughout the supply chain, what are you doing to make peat used in Scotch production more sustainable? Is this even possible?
Yep, Ivan. So, look, is a great question. Peat is a marvellous part of our business. It's part of our heritage, and we treat it very responsibly in how we source that. So as you'll know, 96% of peat that's extracted in Scotland is actually for horticulture, about 3% for fuel, and we're part of the less than 1%. So it's actually a relatively small amount. However, that doesn't mean that we are complacent in any way. We've put big restoration projects that are, quantums bigger than our actual use of the land. So for Lagavulin 200th anniversary back in 2016, we started a project which was restoring more than 280 hectares on Islay. As part of Johnny Walker's celebration of 200 years, we also up in the Cairngorms National Park, together with the Scottish Government, Nature Scot, and the Royal Society of Protection for Birds, the RSPB, put in place another large-scale project, almost 200 hectares of restoration. So we're doing this because it's the right thing to do, and it's part of biodiversity and restoration, and it's fantastic as a medium for capturing carbon. But we also make sure our extractions, which are very low, are very responsibly managed. And when it comes to the question about if it's even possible, don't for a second think that it's something where we are tearing into the landscape and extracting. It's very much a curated process. And what we do is, if you take Islay as a good example, we've got a license dating back to the 1980s that lets us extract peat from the land in about 65 hectares. we take from around 35 hectares, but we only actually extract from 1 hectare. So it's a relatively small impact, and it's an important part of the Scotch whisky industry and how we create flavour in our brands.
Thank you. Ewan? Next question on Africa.
How many markets across Africa are there cubes in place? Can the model be used in other regions to target mainstream spirits?
John?
Great. Yeah, thank you. Well, look, I think before I answer the question on cubes, which is our kind of agile way of putting spirits production on the ground, you got to ask the question, why do we need it in the first place? And it's because the growth in spirits across Africa is now phenomenal. If you look at our LDA to 34-year-olds, the penetration over the last 10 years has increased 700 basis points. So what we're seeing is a real interest in that LDA to 34-year-old category amongst men and women in spirits, in cocktails, in mixing drinks. And so that's a very exciting development for us, and we're seeing spirits grow incredibly fast year to year. Now, Cube is a very low capex way of us testing really the waters for whether an opportunity exists in a marketplace or not. If you look at what we did in Nigeria 4 or 5 years ago, we initially led with the Cube, and then once we proved to ourselves that the spirits opportunity was enormous, we then put in a higher cost but more efficient fixed line operations. But then look at other markets like Angola, where we don't have any on-the-ground presence heretofore, and now we've recently set up a joint venture with a local partner on the ground, and we've again used the Cube as a way to test the water, where we're now locally bottling spirits and taking some nice market share in spirits. So I think it's a very nice way for us to build on the growing kind of penetration of spirits, to sit alongside our more alongside our brewing operations across the countries. And finally, I think it allows us to create kind of a beachhead in new markets which previously were inaccessible to us.
Thank you for the presentation. What is your strategy for mainstream and economy beer in Nigeria and more broadly Africa?
Right, well, if I speak to Nigeria specifically, I mean, the reality is we have exited mainstream beer and low-value beer. We felt that we didn't have the right to win there. We didn't need the capacity utilization benefit of that. And finally, we felt that the margin was very, very low. And so if you look at our portfolio that we now have pivoted to in Nigeria, it's quite exciting. Because I feel that we have a strategy that plays to our strengths, where we're focusing on Guinness, malts, RTDs, we're a big player, and then finally into mainstream spirits and IPS. And I think all of those play to our strengths. We feel there's some significant profit pools there, and we think there's some significant growth there. And I think that was shown out in F21, where, despite the challenges of COVID, we grew the business close to 60%. And so I would expect that new kind of focused portfolio strategy to allow us to continue to grow quite aggressively in Nigeria. I think more broadly across Africa, I think it's on a case-by-case basis. Where it makes sense, we would certainly play in value and lower mainstream beer, like in Kenya, for example, where, given our market share position, but also given the tax regime there and the large illicit sector, it makes sense for us to play in that segment of the market and encourage people to trade up from the large illicit sector into more formal regulated drinks. So I think we look at that really on a country-by-country basis across Africa.
Thanks, John. Next.
In terms of your people capabilities, what do you need to add to achieve your 2030 ambitions?
Marie?
I mean, not surprisingly, I'll say that we need to continue to be focused and invest in digital, data and analytics, and new skills that are becoming more and more relevant over time. We've started with that investment. We're building the skills internally and acquiring where we need to. So we will continue to invest appropriately in those new skills. But I think over and above and beyond that, our absolute commitment is to grow talent and acquire talent that are very driven, curious, creative, capable of being agile. We've certainly learned through COVID that ability to kind of work cross-functionally with pace is the most important set of attributes that we would have at Diageo. Jump in, any of your team, we can share many examples of how that's enabled us to get faster at innovation, whether that be in Europe, in GB, in many of the markets across Europe, or in India. You've heard some of the examples that John and Hina shared in the presentation. So agility, speed, drive, and that creativity that's always been part of what Diageo is great at.
Yeah, I'd add that to Mairead in terms of capability is one way to look at it, but the culture, we talked about that in the last presentation. You know, COVID really has been an accelerator for us, and the way we focused on working in sprints, much more external focus, winning market share, moving faster to understand and capitalize on consumer insight. We continue to do that well, and we believe we'll continue to win, and that's where culture and the attitude of our people really do give a competitive advantage. And we have also built a muscle over years on everyday efficiency, just an orientation towards the world's changing fast. What won today is not going to be the formula for tomorrow. Therefore, you got to have significant reallocation of your resources and zero base your thinking year to year and quarter to quarter. So we think some of the things we've seen in the last 18 months bode well for the future.
Yep.
You recently introduced 6 months paternity leave at Diageo in a number of markets. Can you talk about what uptake there has been?
I mean, we're really proud of the rollout of this policy in particular. It's not easy to roll out a global policy in over 70 countries globally, particularly when you see cultural differences across those markets. We've seen great take-up in Europe, for example, and in the US. You'd expect me to say that. But what I'm really proud of is seeing the response of employees across the globe to that rollout. I particularly love seeing the faces of the men on the operating line in Brazil when we shared with them the news that this policy would be available. There was just absolute joy, and there was an anticipation in advance of that rollout that some markets in Latin America may be a little bit further behind, but actually that's not what we've experienced. We've seen many of our senior talent take up the new option on 6 months paid leave for men, where they have had children introduced into their lives, and I think that's phenomenal. And in terms of a few stats, 23 days was the average or the maximum, I suppose, that men took on the arrival of a new child into their lives, and now that's gone up to 99 days over a 12-month period on average. So it's astounding the impact it's had. We believe it creates opportunity for more diverse talent to fill in those roles when individuals go on leave, and it's definitely part of how we intend to be inclusive. If Hina can speak, I think it'd be really interesting to hear from her, because it was rolled out in India very recently. I'm not sure if we can patch her in.
Hina? No, she should be on.
Yeah. If you can hear me. I mean, we rolled it out very recently, just a couple of months ago. And I mean, Mairead, you described the ecstatic look on everyone's face. And I think India, it was breakthrough. I mean, we got massive social media engagement on this subject because it was so breakthrough in India. And we're already seeing uptake, men and women alike on parental leave. And there are, every day there's an engagement from men saying that this has really changed their life in terms of being able to spend time with their babies. So it's quite leading here. And another progressive policy that is making a big impact in terms of motivating other companies to look at.
Yeah, I think the key point on that is the ability to then attract better quality talent, to broaden the scope of who will join our business, and we think that's giving us a competitive edge from a performance perspective.
Great. Next question.
Our next question is for John Kennedy. Where's the on-trade channel in Europe versus pre-pandemic in recent months, and how is Diageo performing in the channel?
Yeah, we've paid particular attention to our biggest countries, which would be GB, Ireland, Southern Europe, and what we've seen is encouraging. So we're running, if you take beer, that's running in GB and Ireland at about 85-90% of pre-COVID. Spirits are actually doing better, so we see a strong snapback in the channel, which is encouraging. And actually, if you step back a little bit further, particularly if you look at the total spirits market across both channels, give you a bit of color on that. In the last 3 months, spirits in volume terms are actually growing versus pre-COVID in total. And they're outperforming beer and wine. We see some share shift into the spirits sector. And then within spirits, we're seeing an acceleration of the trade-up phenomena. We're seeing premium plus spirits grow in double-digit rates, much faster than mainstream. And within that, we feel good about Diageo's performance. We've had, you would have seen in our F21 results, we won TBA share in 6 out of the 6 Europe markets. We won spirit share in 5 out of the 6. Those trends have continued in the last 3 months. We're seeing significant share gains for Diageo in 5 out of our 6 markets and at a Europe level overall. So it feels like there's some tailwinds for spirits, and Diageo is well positioned in the sector.
Thanks, John. One last question.
Yes, our last question in this session is, how important is your ESG performance to attracting and retaining talent?
Yeah, I can take this. Very important. And I think one of the distinguishing factors in our ability to attract, and we are attracting really top-notch talent from some of the best leading reputed companies in the world. There's 2 things that go hand in hand. One is performance, and the other is our purpose, which includes our ESG commitments around inclusion and diversity, grain-to-glass sustainability, and positive drinking. But I think, and hopefully you got this from this session, from Mairead and John and Hina, the Diageo magic is both. So you've got to be a performing and winning company, and we have the privilege of really being a standout company on ESG as well. And that is something I'd say this leadership team takes really strongly, and it's also the kind of people we attract, because we are looking for high performers, but then very much people who are doing the right things by way of our people, society, and the planet. And it is a big distinguishing factor of our employer brand. And it helps us retain talent and clearly helps us attract. Well, thanks very much for your questions in this session. We'll move on to the next session.
Thank you. This concludes the Q&A session 2. If your question has not been answered, please contact the Diageo Investor Relations team. Please stay tuned for the next session. Welcome back to our 3rd Q&A session. To ask a question, please use the question function at the right of your screen. Please submit questions that you would like to ask the speakers who you have just heard from. Our first question is, what are the assumptions behind your target of 6% TBA value share by 2030? Which geographies do you expect will drive the biggest step change in your TBA share? Do you think you can increase your share of TBA in the US by 50% from circa 7% to over 10% by 2030?
Hello, everyone. Again, Deborah, I'll turn the US question to you, but let me just start more broadly. The first point I just want to clarify, our 2030 TBA share goal is an ambition. We are not giving you 9-year guidance. It's an ambition. Now, why is it important? It's important for our people and for our partners as to how we think about the business. You will have noticed we're talking TBA. That's where we see the opportunity for us to grow, and we are a small player. And we want our teams, our leaders, to approach the business with a strategic sense of possibility and ambition. We will give you guidance, and we will call it guidance, as we have for the 3 years we've laid out. So that's what's behind the 6% ambition, going from 4 to 6. The second thing on geographies, I would say we expect share growth everywhere. In the US and Latin America, Africa, we actually see Diageo, and this comes back to Diageo's strength. The portfolio and of categories, brands, and geographies we have, and the actions we've taken over the last few years really positions us. So we feel very confident about growing share. Certainly our ambition is to grow share everywhere. Deborah, the US.
Sure. I mean, I think, look, when you think about the fact of U.S. spirits and the strong growth that we're seeing based on premiumization and, sourcing volume from beer and wine, that should continue. When you think about our advantage portfolio, largest whiskey company, fastest growing tequila company, the investment that we're making in A&P in the U.S., once again, following Ivan, I would say the same thing. We don't have this mapped out quite the way that this says here, but I do think, you can expect sort of some reasonable, share growth, and that's sort of, 30 basis points. That's about what we're doing right now. And so I do see continued share growth in the U.S.
Thanks, Deborah. Next question.
When you compare the makeup of your prior group growth framework, 4 to 6%, versus new framework, 5 to 7%, which are the key moving parts by region? Just the US, or are other regions also expected to grow faster?
Lavanya?
Yeah, sure. So the way I'd answer the question is, what are the key drivers of us believing that we can actually grow a point faster than our previous guidance? I think it's really three things. The first one is, spirits is growing faster and taking share away from beer and wine, even faster than it did previously. And we see that in North America, we see that in Europe. In a previous question, John O'Keefe talked about what we're seeing happen with consumers getting more interested in spirits in regions such as Africa. So I think the phenomena of spirits growing faster is really across the board. The second thing that gives us the confidence is that we have a more advantaged portfolio than we've had in the past. And you saw from my presentation, we have a leadership position in 4 out of the 5 fastest growing categories within spirits. And in the fastest growing category within spirits, and tequila, we have the fastest growing brands, and we're gaining share of total spirits. So that's definitely an advantaged position. Over half of our business now is in premium plus price segments, and that is the fastest growing part of the category as well. 25% of our business is in super premium plus, which is growing even faster than premium. And so that gives us confidence that we will grow faster. And the third thing that I would say is we've built the capabilities to execute better. We have more deep consumer understanding, our marketing's better, our customer execution is better, we have the digital tools and the capabilities to be able to do this with precision. We are better at driving productivity, and that is what enables us to be able to fuel the business. And most importantly, we have an organization that is really motivated and charged up. And the passion of our people, I think, really is showing up in the results that we have achieved here in fiscal 21, when we gained share in 85% of our measured markets in the off-trade.
Thanks, Lavanya. Next question.
You have increased marketing spend from 15.5% in 2017 to 17% in 2021. Does your guidance assume a natural cap to this level?
No, it doesn't. We don't set targets for A&P percentage. I hope what you've got out of today is you can see the rigor and the analytics that go behind our marketing investment decisions. So when we see good high return opportunities where spending is right and will deliver us quality, sustainable growth, we're going to do it. Our algorithm is very dynamic. And so we will determine, say, as we go into fiscal 23, if the presidents want to spend more and have confidence in the growth and the returns they'll get. So we don't operate to a percentage target. And I think you've seen over the past few years, we have taken up our reinvestment. But the quality of top line sustainable growth has come along with it. So we feel good about the returns that go with that A&P analytical understanding we now have. Next question.
Our next question is, Can you break down your assumptions on margin progression in more detail? How much is coming from cost saving? What's the impact of marketing? And what is the expected contribution of operational leverage? And is there anything else we should be aware of? Is there any reason why you can't exceed historical EBIT margins of 32%?
Lavanya?
Sure. So when you look at our margin progression, I think I'd start by saying that, historically we've been able to grow this business with both volume growth and value growth. And on a business of our scale, with some of our big global giant brands, when you grow volume, you obviously generate operating leverage. The other thing that has helped us with margin expansion has been premiumization. The category has premiumized and our portfolio has premiumized over the years, and that has definitely allowed us to grow margins. The third driver of margin improvement is revenue growth management. And I spoke a bit to it in my presentation, but it really helps us to be able to take headline pricing, to be able to manage our mix of trade spend across packs, across SKUs, across different markets, and to do so in a really intelligent way using data that allows us to do what I call walk and chew gum. That means grow volume and grow price at the same time, thereby growing share. So that definitely helps us drive margins as well. Productivity, you've seen that we've delivered productivity extremely consistently over the years, 400 million on an average of 400 million, even after the years that we got out of our productivity program, because that's really embedded within our culture. And then the last piece that I would talk about is that we're growing share and investing behind our brands with superior investments going behind our brands really helps us to be able to create that virtuous cycle of growth that then drives leverage and margins even further. So is there any reason why we can't exceed historical EBIT margin levels? I'm not going to answer that question directly, but I do think there is a significant opportunity for us to be able to grow our operating profit in line with our guidance, which is 6 to 9%.
Our
Thanks.
next question
Lavanya?
is, what has driven the raised sales guidance? Is it better volume, mix, or price? And is it primarily led by the US?
Yeah, I can take that. It's not the US that's driving it. We are seeing improved performance everywhere. So we're looking at all our regions, and this is the result of, I'd say, the actions and the investment decisions and the execution capability, everything we've talked about today, that gives us the confidence that our outperformance, which you've seen in our recent market share performance, can continue. We do believe the executional improvements right across the business are contributing to the outperformance. And as it relates to volume, price, and mix, we want all three. The beauty of this business is it's got volume growth. The beauty of our consumer is they want to drink better. And the beauty of our analytics is we know how to get the right level of price to enable us to get the flywheel algorithm that we want to drive efficiency, invest in the business, and grow margins.
Thank you. The next question is for Deborah. Does Deborah believe that the midterm NSV growth rate of the US spirit category will now exceed the long-term pre-COVID trend of circa 4%?
Yeah, I do think we can do slightly better. And as I mentioned, as I just mentioned in the prior question, it comes down to the strength that we have in tequila growth, our strength in our whiskey portfolio, the strength that we have with the consumer, and I think the strength of the spirits industry overall, it certainly feels like we could do slightly better than that 4% that we were doing pre-COVID.
Now a question for Alvaro. In your experience, how do you see the demand for Scotch evolving in Latin America in the context of weak local currencies and the need for you to increase prices on these imported products?
Yeah, so Scotch right now is quite a vibrant, category in Latin America, which is outperforming not only spirits, it's also outperforming TBA. And we've got quite a solid portfolio of brands like Johnnie Walker, Buchanan's, Old Parr, that now, especially this after COVID, are really getting to gain share of serves of at-home consumer occasions that before were predominantly of beer and wine and locally produced spirits. So I think there is high level of confidence around keep doing that. And also we need to remember that we operate in a region that has been dealing with inflationary environments and currency devaluation and fluctuations for a long time. So I think there is a high level of confidence around keep managing both, the pressures that we are having plus the opportunity that we have with the Scotch.
Thank you. Could you please discuss your outlook for the vodka and rum categories and your opportunities here? By your own admission, these are not priority categories, but clearly they remain large portions of your sales mix.
Yeah, I'm happy to take that. Firstly, I'm not sure I've ever said these are not priority categories. Here's how we think about the total portfolio of Diageo and take a really long view, because product categories do go through cycles, right? We've seen it on whiskey 20, 30 years ago, which was being called as the end of whiskey. It came back. You saw the resurgence of gin that's happened in the last 8-9 years, which has been extraordinary. And so we take the view that we've got to keep these brands vibrant and relevant. And actually, I feel good about our vodka portfolio and what Ciroc and Ketel One and Smirnoff and the future that we see for them. Feel very good about our rum portfolio as well. But we don't shape category dynamics. Right now, obviously, tequila and whiskey and gin have more momentum. But we're very committed to ensuring that these brands continue to build their equity in these categories, and that we ensure we're positioned for when long-dated, long-term trends begin to shift. Smirnoff and Captain Morgan in a lot of the world still have a lot of runway for growth. It's a little more challenging in the US, but even there, it's now in modest growth, and within the categories is doing better, within vodka and within rum. So I view this as, at any point in time, you are going to have parts of the portfolio growing faster, parts growing slower. You'll have markets growing faster, markets growing slower. Diageo's strength is our ability to manage across the diversity of this portfolio and deliver consistent, sustainable growth.
Thank you. Our next question is, how integrated are your tools with distributors in the US? And the convenience channel is becoming increasingly important for spirits with growth of prepared cocktails. How can you win in this channel where beer distribution has always had the edge?
Deborah?
We actually have really good, we have two networks. We've got the spirit distributor network and we've got the beer distributor network, and we feel great about both. And really, when we're looking at the convenience portfolio, we are looking, across both spirit cocktails in a can that goes through our spirits distributors, as well as we've got still, Smirnoff Ice turns 21 this year. So we've got a strong FMB portfolio still as well that goes through our beer network. And so we're quite integrated, particularly with, some of our distributors. And we use a lot of their information as well as our own as we're using tools like Edge. And so that absolutely helps us, be able to take these products to the right places, to the right consumer at the right time.
Our next question is, Christina highlighted Diageo's cutting-edge innovation capabilities. Given your best-in-class consumer insight tools and generally strong number 1 and number 2 positions in most product categories, why have you chosen to acquire brands in areas like premium gin or pre-mixed cocktails in recent years, rather to create them in-house using these capabilities?
Yeah, I'm happy to take that. I'd say we want both, and we're very disciplined about when we acquire and what we expect. So we're very selective in the acquisitions, and clearly using our innovation engine to build new brands and new products as well. In these two cases, I mean, Aviation Gin, we've identified as a brand that has over several years built very nice traction in the marketplace. We think it's, with the trend of premiumization in gin ready to take off in the US, we believe that's well positioned to capitalize on those trends. And some of the cocktails, the Loyal 9 cocktails, again, very distinctive proposition, early stage, not a lot of capital, and it helps speed the process. A spirit brand takes a long time to build from scratch, typically. And so when we spot things early, a bit like we did with Casamigos and why we went after Don Julio when it was much smaller, we will always use both.
Thank you. The next question is, are you expecting acquisitions to be a material contributor to your ambition to increase TBA share from 4% to 6%? What is the next big growth opportunity that you're investing in today for the decade ahead?
Sure, I can take that, Ivan. So we do expect to have some regular investment in M&A. It has been a huge driver of value for us over the last several years. You would have seen that 460 basis points of growth for our US Spirits business came from the acquisition that we made in Casamigos. Equally importantly, divestitures have played an important role as well in accelerating growth, as well as generating funds for our shareholders and creating more focus in the organization on what we go after. We are very picky about the brands that we buy. They've got to be built the right way. We need to have confidence that they're going to deliver. We are going to be able to deliver strong shareholder value by making the acquisitions. We're extremely disciplined in how we go through the entire M&A process, but I do expect that it will be a key contributor to our ambition to grow. In terms of what are we investing in today for the decade ahead, a lot of things that we've talked about today. I mean, you look at the $500 million investment that we have announced on expanding capacity in tequila, the single malt distillery that we announced that we've just started construction in China, the Guinness storehouse in Chicago. These are all things that will help us to be able to grow this business for years to come, as well as our investment in digital capabilities. Christina shared, and Deborah and Alvaro shared a number of the tools that we are using in this space, and this will continue to fuel incredible growth for us in the decades to come.
Thank you. Next question.
Is low and no alcohol a significant part of the new growth algorithm? How should we think about it going forward? Focus on organic or M&A?
Yeah, I can take that. I mean, we do see the space of low and no alcohol as attractive and strategic going forward. We do intend to participate in it, and our goal really is to lead the shaping of it, particularly around in spirits. We're going to go about it with innovation internally and M&A, as you've seen, a brand like Seedlip, which came in through Distill Ventures, and organically, where we've had great success, say, on Tanqueray 00, Gordon 00, Guinness 00 is off to a very good start. we've not set a quantified goal here, because our goal is really to help lead and shape the market. That's how we're looking at it. And we think it's really attractive on consumer trend opportunity, which we want to lead the development of.
Our next question. Can you provide more color around the phasing of the 1.2 billion cost savings over the next 3 years?
Sure, I can take that. So in the guidance that we've put out for the medium term, that's fiscal 23 to fiscal 25, we do believe we will be able to deliver $1.2 billion of 1.2 billion pounds of cost savings in the 3-year time period. We are not providing explicit guidance on exactly what the number will be year on year, but let me tell you a little bit about why I have such confidence in our ability to be able to deliver the continued productivity. First and foremost, this is embedded in our culture. And our people, and what do I mean by that? What I mean by that is that our people wake up every day, go to work every day, believing that this is something that they need to do. And why would somebody want to do that? They want to do that because they know that each dollar saved gets it reinvested in growing our business. And in a company that loves our brands as much as we do, this is why this entire machine works. We do believe that we will get a fair chunk of those savings from COGS. We believe that marketing efficiencies will be another driver of the savings. And we do believe we will get some savings out of the overheads area as well. And so I do have strong confidence in our ability to be able to deliver productivity savings over the 3-year time horizon.
Thank you. I think we have time for one more question. Last question.
Yes, the last question today is, why raise the low end of the guidance from 4 to 5%? Historically, the spirits industry has been quite cyclical. Have your views on the cyclical component changed?
Yeah, I can take that. And maybe I'll use it to wrap up what today was about. Firstly, specifically, TBA is not that cyclical, right, in terms of the underlying consumer demand and the drivers of premiumization that are at work. So we feel very confident about that. I hope you took away from today this raising the lower part of our guidance from 4 to 5% really reflects our confidence in the business and our ability to deliver sustainable quality growth. It stems from the participation we now have in the portfolio, the product categories, the brands, the price points, the geographic footprint, right? US and China and Europe strong. You see tequila, whiskey, gin strong. Reserve brands are growing at a very fast pace, and we have the leadership position there. So the reshaping of the portfolio that's happened in the last 5 years positions us for better growth. Then you look at our investment behind this. We're doing it much more smartly. Our marketing and commercial execution, as I hope you've seen today, is leading edge. We've invested behind it, and the quality of what both creative data and analytics and route to consumer execution is now at a whole different stage. Efficiency and productivity is built in, and that gives us the oxygen to reinvest. As Lavanya talked about, it's very much in our culture. Our commitment to sustainability and ESG, I hope you would agree, we are genuine in our desire to lead here. And if you look at our track record over the last decade, we've had impressive gains there. And then finally, I would say, to Lavanya's point earlier, our people and our culture is a real competitive advantage. And as we put this all together and look forward, this is what gives us the confidence in the medium-term guidance that we've laid out. It is a competitive world out there, and but we still have a lot of opportunities to improve in our execution, in parts of the portfolio that are not working. And so I know I speak on behalf of the executive committee team here in front of you that this is an ambition we are both excited and determined to deliver. So thank you everyone for your time today. I hope you found the Capital Markets Day informative and useful, and we all appreciate hugely your interest, support, and investment in the company. Thank you.